Hey everyone, my name is Chris Bell. This is me right here. I made a video about 2 to 3 months ago on Tesla and 5 reasons why you should not buy their stock. They are a great company and they're doing some cool things, and I would love to own a Tesla car myself, but owning the stock is very scary right now because they're leveraging a lot of money and investor equity, and I think that they have a really overinflated stock price just because the name Tesla is very cool. Owning a Tesla would be cool, and I made a whole video for financial reasons why not to buy the stock based on its current price right now. If the price was lower, I would definitely say buy the stock. I'm not going to talk about news or types of cars or anything. 53 billion, and they were 310 not too long ago. So I thought it would be funny, since I got a lot of likes on this video so far in a short amount of time, I thought it would be funny to compare Tesla's stock and their financial statements. So their price is 317 versus 310, so it went up. Most things have gone down in the last 2 months, but I thought it would be funny to compare it to a Warren Buffett stock, which is GM, General Motors. $33, $317, but their market cap is very close to the same. GM, you could buy the entire company for 47 billion, and Tesla, you can buy the entire company for about $7 billion more, 54 billion. The dividend, you do not get a dividend at Tesla. Dividend you do get from General Motors, you get a 4.5% dividend based on the current price. This percentage changes based on the total amount that they give out. Typically, they give out the dollar per share more often. They don't change the percentage every year. They leave this the same. And based on when you buy their stock at what price, this number changes. But Tesla doesn't offer a dividend at all probably because they're losing money. Earnings per share down. Earnings per share are good here, but those numbers are tough to look at. Let's look really at the financial statements. And this is a Warren Buffett stock. So you're going to see very quickly why Warren Buffett buys the stocks that he does. But it's so simple and it's so plain that it's hard to even grasp how smart he is because of how simple he is. Huge assets, 212 billion. Everything in Yahoo Finance uses an extra 3 zeros. So this looks like million, but it's actually billion. 212 billion in assets, 178.76 in liabilities, which means they have a total of, if they had to sell everything off, all their inventory, collect all their cash, get rid of all the people, everyone out on the street, time to close the doors, if something happened and cars are not being sold anymore, they have $29 billion. And it cost you 46, I believe it was, or so, 46 to buy it. So if the stock price right now is 33 and the company has half the net tangible assets of their market cap, then you would get half of your money back. So let's assume you approach the CEO because you have $46 billion in your pocket. You offer him the exact share price to buy all of it so that you can own it and be the CEO. You paid 46, and tomorrow everything's like, oh my God, we have to close the doors. You sell everything off and you get 29. So now let's look at the income and see how quick you're going to get back to the $46 billion number. 29 plus, let's just think about 30 for easy numbers. Oh, they lost money last year. Made 3, made 9, made 9. Again, this is billion. They're making money every year, and they had a positive earnings per share over the last 12 months. So let's look at the quarterly real quick because I did not even look at this before the video. I just know that GM is that much better than Tesla. So let's take a look at what happened. Here it is. It's in this quarter right here, minus 5 billion, probably because of an income tax. So here it is right here. This income tax expense, you can see 7.8 compared to 466, 519, and 100, their income tax expense. It appears that GM pulled in a bunch of money because Trump offered a good tax rate for companies to bring money back that they made in China. If a company makes money in China or any other country, they pay that tax rate. And if they bring the money back to the US, they have to pay the additional tax up to 39%. So a lot of other companies only pay 20% in tax because they have their headquarters in another country. The US has to pay 39%. Trump lowered it down to 20% for corporate taxes so companies could bring their money back and not have to pay that extra income tax. So he only charged them 5%, but they brought a bunch of money back in. That's what happened. Huge expense. Looks like they're negative and they're not. That 7 would turn this into positive 2. And you would have positive 2, 1, 2, 2, back to normal. This is per quarter. And per year, 2, 9, 9. I knew I hit some button. Minus 3 because of that 5, but if you add 7 because of that tax expense, you're at 10. 9, 9, 10. They're going up and they look like they're going down. Warren Buffett must be in his glory because he is going to buy the stock even more as it continues to go down. People are worried about all different kinds of things with car companies right now, but GM is in the United States. For the most part, they have other locations in other countries and they pay that tax expense, and then when they bring the money back, they have to pay that extra. Now, okay, let's say they're making 5 because it is 9, 9, 10, and I don't know what happened here, but I won't look into it right now. Even 7. So you have 29 plus 7 plus 7 plus 7 in 3 years is 21. You get up to 50. In 3 years, you buy this company for um, what was it, 46, and you start with 29, and in 3 years you have 7 plus 7 plus 7. You already have more money. So if you get up to that point where you have 51 or 50 and you close the doors, you sell everything off, you can sell it for that 29 and you would end up making money. You would have 3 billion in the positive. Now let's turn around and buy Tesla for 54. No dividend. You were collecting a dividend this whole 3 years too. 4 or 5%. And you're minus. This is just going to be stupid because they're doing so horrible. Balance sheet. Let's start with what they have, which is a total joke too, because I'll show you in a second. Total assets 28, liabilities 23, and they have 3.8, which they really don't. I'll show you in a second. 4, 1, 1. They're just staying positive. So if you bought the company for 54, you would be able to turn around and sell it, all the stuff tomorrow, all the cars, have all the cash, and you would end up with 3.8 for the stockholders. And as a stockholder, you buy this company at 317, which is 54. 54 divided by 18 is 3. So if you divide it by 18, 317, you buy the company for 317 per share, you would end up at, divided by 10 is 31. Divide that by 2 is 16. You buy the company for 54, you sell it for 4, is like buying one share for 317 and selling it for 16. Here, you buy one share for 33, and if you have to close the doors tomorrow, you end up with 16. 33 to 16, 317 to 16. That would be a real sad day if Tesla doesn't continue going forward with their income statement of annual. Sorry, my computer is a little slow. But I want to show you the real numbers. I don't want to just talk about them because you might not believe me. This is 3 more zeros added on in Yahoo Finance. Minus 300 million, minus 800 million, minus 700 million, minus 2 billion per year. It's getting worse. It's going to be minus 4 billion soon. And I heard they might be making money soon. Oh, Tesla might be making money. That's awesome. Good for them. They only have 4 billion and it costs 54 to buy them. Minus, minus, minus. Oh, and they're positive. They made $300 million. They lost 4 or 5 billion in the last 5 years. They made 300 once. Now, I want to show you something else because I know this about Tesla and you have to dig in. Cash flow statement. Not many people look at the cash flow statement, but this will show you if they're paying a dividend because it will show a minus in cash. Right down here at the bottom of the cash flow statement, you have financing activities, dividends paid, 0, 0, 0, 0, 0. Sale and purchase of stock. This is wrong. That is not 0. They sell their stock a lot. Borrowings. So they borrowed some money, paid some money off, paid some money off, paid some money off. Debt, paid some debt off. This, I'm telling you, this is wrong. They should have minuses here because they're selling their own stock, which I know for some reason, I don't know why this is a minus, but they're selling their own stock because they're losing money. Their income statement is losing money, so their savings account, which is a balance sheet, they cannot be putting positive amounts here unless they're selling their stock. So I'm sure there's another source for that. I'll do that in the video. I'll look it up afterwards so I don't make this video any longer, but I'll put a little blurb at the bottom that shows a different website source that they are actually says sale or purchase of stock and their cash flow statement goes down because up. It would show that their cash flow statement went up. It would show that they have positive amounts of cash here that they're collecting because they're selling their stock. If they were buying back their stock buybacks, this would be a negative cash because they're spending their money to buy back their own stock because it's an attractive price. Tesla's doing the opposite. It's attractive to sell, so Tesla's selling their own stock while people are still buying it. So you're losing money every year. So if you bought this company for $54 billion, you would be losing $1 billion per year. So 54, 55, 56, 57, 58, 59, 60 in the minus compared to in 3 years you're in the plus. Now, you do own this company, but you're not going to be able to just give yourself these bonuses to, they're making money, but how do you know the stock price is going to go up, right? Tesla's stock price continues to go up because people keep buying it blindly and don't even think about it, or, oh, well, yeah, they'll start making money. GM is a great company, and they're looking into all this energy efficient stuff. I don't even have to Google it to look and see. GM is working on all kinds of stuff right now, so I trust them. Warren Buffett has trusted them for a long time. They give you a 4.5% dividend. You can't even get that in a savings account. You can't get that in a CD. You need to buy something to get that. And at this price right now, this is really attractive to make. You'll make 4%. If you put 10 grand into this stock, you can make 4.5% in dividends year in and year out for as long as you hold it, as long as they keep giving a dividend and they keep making their $9 billion per year while they keep losing money per year. Even if they go positive, how long is it going to be before they start making 9 to 10 billion per year like GM already is? And the price is less. You're getting a dividend per year. There's so many reasons to buy this company instead of this one. And people are just jumping on the bandwagon, and you might be the last one on the train. You just might be. So that's my assessment. I think it's funny. People just continue to buy this, and CNBC hypes it up even more because they get good ratings from hyping it up. They don't get good ratings from telling you not to buy stocks. They just continue to pump these FANG stocks. Tesla and Tesla's not even a FANG stock. Facebook, Apple, Netflix. I don't know how Netflix jumps in there, and Amazon and Google.